Alright guys, so let's talk about the deal that was just concluded, or is it really concluded? Now the US and China talks are done and it's time we sit back and really analyze it, because when you dig through the weeds, there is a subtle winner here. One party comes out on top. Now during his testimony to Congress, Besson believes that China will stand by the agreement. Now I guess they will if the US doesn't pull yet another chip ban, another sanction out from their head. It was a very long talk over 2 days, and the results are actually very murky. Trump, of course, is framing this as an epic win for the US. Apparently, Beijing will be supplying US industries with rare earths and magnets, but it goes beyond that. China will be selling them to the US and providing the shipments up front, and it will be for any amount that the US wants. And in return, we are back to the Geneva deal. Chinese students can continue studying in US universities. Now, doesn't sound like anything new. From this angle, it looks like China is getting a raw deal. Providing rare earths upfront means making the first move and hoping and praying that Washington will reciprocate. However, once again, this is coming from Trump. He loves to hype things up, and until Beijing issues an official statement, I find this a little hard to believe. According to Lutnick, it seems to be more of a two-way street. Both sides get something. Now, China pledged to speed up shipments of rare earths critical to US auto and defense firms. In return, Washington would ease some of their export controls. That obviously means undoing the semiconductor curbs. We still need the details though. What kind of chips can China get to buy? Will it be Nvidia's H100 chip or better? And let's not forget that export control extends to G7 airlines as well. Will Tokyo Electron and ASML be allowed to sell more advanced chip makers to China? Can Beijing buy the latest lithography machines from all these suppliers? Now, all these are critical details that are not revealed just yet, but I highly doubt China will ship over a boatload of critical minerals based on a promise. Hope is not a strategy, especially during this trade war. But there's also a second layer to the deal, which is actually the Geneva deal, and that is the tariff rate and actually shows who comes out on top. Now, the US will be getting a total tariff rate of 55%, so Chinese exports coming to the US will get taxed at a rate of 55%. China will also impose a 10% tariff on US goods coming into the Chinese market. The exemptions for Chinese electronics, smartphones, and chips are still online, so that product flow is uninterrupted. However, does China really hold the shorter end of the stick? And it all boils down to who pays for the tariffs, and by now we know it's either the consumer or the importer. At 10% versus 55%, we can safely say that US consumers are getting hammered 5 times more. Chinese consumers won't suffer from inflation problem, and Trump just confirmed higher prices for American buyers. Now, Ludwig has also confirmed that US tariffs on China are fixed, and this is a very important point. So, in other words, both economies will be decoupling, especially the US from China. So American consumers have to prepare for a world of structurally high inflation. It's going to take years and maybe even decades to replace Chinese supply chains, and there's no guarantee as well. Now, as we speak, the CPI inflation report is out, and we are seeing a rebound in prices. The lag effect is starting to manifest itself in May. Now, since March, core inflation is still staying sticky at 2.8%. Meanwhile, headline inflation has rebounded up to 2.4%. And if it wasn't for OPEC flooding the market with oil and keeping energy prices down, this number would have been much worse. However, it's imperative we understand the situation going forward. Now that Chinese goods will be hit with the 55% tariff rate, many exports to the US will halt everyday goods Americans buy. Now, we are talking about stuff on the shelves of Walmart and Target. Critical inputs to US industries will also fly up. And here's how serious the decoupling is gonna get. In May, the US imported less than $29 billion worth of goods from China, and we can expect that amount to hit towards zero over time. China imports less than $11 billion worth of stuff from the US, and that amount will also hit towards zero. But there is a qualitative difference beyond just the dollar amount. China can replace their $11 billion imports without any price shock. Most of it are commodities like agriculture and energy, and they can be sourced from other suppliers within BRICS itself. For the US, it's a completely different story. they will have to either make it themselves at a higher price or buy from other alternative suppliers, which will most likely be transshipments from China anyways, but with a higher markup. But let's give Besant his moment of glory. He really believes that the US came out ahead in the trade talks, and it's quite interesting to watch.
China has a singular opportunity to stabilize its economy by shifting away from excess production towards greater consumption. But the country needs to be a reliable partner in trade negotiations. If China will course correct by upholding its end of the initial trade agreement we outlined in Geneva, and I believe after our talks in London they will, then the rebalancing of the world's two largest economies is possible.
Well, the only thing that will be stabilized is higher inflation in the US. The 55% tariff has placed a permanent floor on US prices everywhere. But while Besant takes a victory lap, the storm clouds are brewing. Not only is the trade war not resolved, countries around the world they're getting frustrated with the US. Now we know US debt has been downgraded. Moody's dig a rug pull and they threw away the pristine rating for US treasuries, and the consequences are starting to unfold in real time. Now funds in Hong Kong are planning to cut away their treasury holdings if the US loses their final recognized AAA score, and this could happen within just 3 months. Now, this would be devastating because it will send a signal to other countries that deal a lot in US bonds, and this includes Japan and Europe. All their funds will reassess if holding treasuries are really the best course of action. Now, you would think that US debt has already been downgraded for good, but Hong Kong is still waiting for the final domino to fall, and this time it's from a Japanese ratings agency. Funds in Hong Kong can only invest more than 10% of their money in US debt if the AAA rating is still maintained, and Japan's RNI is the last agency that has the highest score. So will this downgrade happen? Now it all depends on the US debt situation, more specifically Trump's deficit spending problem. And this is where we go off the rails once again. We have mentioned how nothing can stop this train, especially with the big horrific bill. And the closer we get towards a record deficit, the likelier the odds of more downgrades across the board. In May, just last month, Besant ran the economy hot once again. He ballooned the US deficit to $316 billion in a single month, another record. This brings the deficit for the financial year to $1.36 trillion so far. Last year, during the same period, it was only at $1.2 trillion. Ladies and gentlemen, this is why I buy gold, because there's simply no stopping this runaway train. During the congressional hearing, Besant himself predicts the US budget deficit will approach 7% this year. Now, that's an increase from 6.4% last year during the Biden administration. No wonder bond yields are rebounding higher, and that's why funds in Hong Kong are planning to dump their holdings. Can the US outgrow its debt problem? Well, there's no guarantee, especially when input costs from tariffs are heading up. But what's guaranteed is the national debt increasing and interest payments expanding. That's baked into the cake. Now, Hong Kong itself isn't a big problem. The real risk lies in Europe and Japan. They hold 37% of total outstanding bonds, and Japan owns 12%. And after Besant's report, yields on the long end started to rise. The 10-year is back at 4.5%, and the 30-year is about to break 5% again. And if this continues, losses could pile up and funds all over the world might have to sell some of their holdings. The only real way to stop this and to even reverse this is to get the US deficit in order. And even Besant himself knows he's full of it. Even Congress can't take him seriously. It's really bizarre how the US debt situation is now becoming a comedy show.
Well, Congressman,
Yes or no? Can you point to one?
if we want to look at the CBO, which
No, I'm not asking you, is there an independent expert that you can point to that says that this bill will not add to our national debt? Yes or no?
yes,
There is?
yes,
What are they?
Art Laffer,
Pardon me?
Art Laffer.
Art Laffer? Great. That I don't think that one counts.
But the situation is about to get worse. As mentioned before, the fallout from the tariff war will take some time. It will manifest in so many ways that we just can't predict. And now the latest domino has fallen, and this time it's from up north. It seems Canada is done engaging with American banks. Financial activities are being outsourced to others. Ontario, a province in Canada, has sidelined American banks for the first time in 14 years. They went ahead and raised $2 billion through a bond issuance. But this time, they didn't involve US banks, which is a very big shift. Wall Street still has the largest network of investors in the world, which means they can easily get buyers of the bond and raise money very easily. However, this bond issuance was done using Barclays and other Canadian banks, and the message should be crystal clear. Canada doesn't care anymore. Financial services are one of America's last few exports to the world, and if you take away Netflix and Hollywood, it's probably one of the last few pillars holding up the US economy. Countries don't really need to counter tariff the US to make a point. They just need to stop using US services to make it sting, and it's a very big market for Wall Street. In 2023, the US exported nearly $176 billion in financial services, and this includes investment banking that helps countries and companies raise money. They help to underwrite bond issuances. Wall Street helps guarantee the bonds be sold. They manage the whole process and they take a hefty fee at the end of the day. And this has to be taken very seriously. Now, it looks small, but there are many international banks in the world that will happily take over market share. Now, the trade war is starting to backfire really badly. Now, this chart is extremely important. It shows total US services exported to the world. By now, we know US travel industry is already collapsing. Tourism is at an all-time low, not just from the trade wars, but the risk of traveling to the US itself. And now financial services are at big risk. This is the third biggest export industry in services for the US. And Canada just reminded Trump that Wall Street is not invincible. Other banks in Europe, Asia, and even local ones can step in to fill the gap. So the longer this trade war drags on, the worse the situation will get. But let's circle back to the China trade deal because we now have an update, and it seems that Beijing does have some guardrails. They have put a 6-month limit on rare earth export licenses. US automakers and manufacturers will get their magnets and they will get their rare earths for half a year. It's also very likely there will be volume limits as well. We really can't see Beijing giving Trump the chance to stockpile everything that he needs, so there will likely be very firm limits. And whether that stands or not depends on the Americans. Will Atlantic or Besson U-turn the chip curbs? Will other export controls be reversed? Because if they don't, we'll be back in the same situation, the disaster before London or Geneva. Then the dream team will have to chase China again for the fourth time halfway around the world for even more meetings, right? This is how ridiculous things are getting. At this point, it's all becoming a joke. Something tells me the clown show isn't over just yet. But let me know what you think. Who got the better deal here? And will more countries start avoiding US services? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.